Our Informatica trade, based on unusual option activity, just returned over 400% profit. How? Have you ever been in a trade and then the stock halts? That moment when the stock freezes, when the market locks out everyone. So no one can buy, no one can sell, but you're already in. You're holding the winning ticket. That's exactly what happened with our trade on Informatica stock. Our members and subscribers were already in before the stock suddenly halted during the final hour before the market closed on Friday, May 23rd. And moments later, breaking news reported that a larger company, Salesforce, was back in talks to acquire Informatica. People rushed to buy the stock, pushing the stock price up so fast it triggered the market's circuit breakers and the stock was halted. But keep in mind, we made over 400% profit not from chasing the stock up during this hype, not from following the news, but from following the data by tracking unusual option activity before the news hit the headlines. Did someone know something early? Did an insider leak the acquisition talks? Maybe. But the real story is that our analysis picked up on it early, on this day, May 15th, just a few days before this acquisition news went public. We were ahead of the big move in this stock, and so were our members and subscribers, the ones who received our email alert or watched our video. This was the video analysis we posted on our channel where we shared this unusual option activity and explained why we were buying Informatica before this AI stock filled the gap. And clearly, our analysis was correct and highly profitable because as you can see here on the chart, the stock did fill the gap perfectly right to the top of this gap zone. So if you want to learn how we knew this gap fill was coming, we'll put a link to this video here. Make sure to subscribe and hit the notification bell so you don't miss the next opportunity. Now, keep in mind, even if you're subscribed to our channel, you could still miss out on some of our most profitable trades. That's because we don't always have time to make a video. Most of our time is spent analyzing data for the exclusive trades we share inside our membership. We email that analysis to our paid members first. As you can see here, this was the email we sent to members the following morning after analyzing updated data to provide additional trade alerts, including Informatica stock, ticker symbol INFA, where we went long and took a bullish position. So if you want to start getting access to these profitable opportunities, sign up on our website. We'll put a link here. You'll get direct access to the trades of wealthy investors and potential insiders so you can see what the smart money is doing before the trade becomes highly profitable. And that's exactly what happened here. That's why we entered this trade, specifically the July 18 options at the 22.5 strike calls, because a wealthy investor bought 11,954 contracts at a price of 35 each. Since options prices are shown here, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $35. And now let's take a look at how much these options are worth. As we can see here on the option chain, these contracts are currently worth between a bid price of $180 to the ask price of $215. And we originally bought them for just $35, which is clearly a very profitable trade. And so, how much profit is this in percentage terms? Well, let's take a look at our analysis when we entered this trade using the profit-loss graph, which already factors in the cost of the trade. Because you can see here, the profit or loss shows up here, and if the stock had dropped, it would have been a negative $35 loss per contract. But since it went up, we have a profit of about $162 per contract. And so To calculate the profit percentage, we take $162 divided by the initial cost of $35 and then multiply by 100 to express it as a percentage, and that gives us a return of approximately 462% profit. In other words, we made more than 4 times our original investment on this trade. And it only took a few days of sitting back and patiently waiting for the profits to come to us, not chasing the stock along with the crowd. Because when a stock halts from a volatility spike caused by everyone else rushing in, you're already too late. You can't even buy it anymore. All you can do is wish you were in before it happened. And so, if you're still chasing stocks after the news goes public and you're tired of missing the big moves, then maybe it's time you got an edge in the markets, one that helps you consistently find highly profitable opportunities, like our recent trade on Informatica. If you missed our previous analysis, we'll put a link here so you can see how we got in early and made a 462% profit after the stock halted. Because the next time a stock halts, you don't want to be on the outside looking in. So just head over to our website, we'll link that as well, and we'll see you on the inside where the smart money wins. As always, please like and subscribe, take care, and have a wonderful day.